Welcome back to the Investing for Beginners community. I'm your host, Johnny, and in today's video, I'm going to show you how you can beat the stock market. Yep, that's right, guys. You want to trade these companies with confidence, like Sophie, they're up 16%, and ZFox, they're up almost 20%. Now, how do I do it? Well, I'm going to show you how to make plays on these companies with confidence. That way you don't hold the bag and lose your entire position. All that I ask is that you subscribe to the channel. If you haven't already, smash that like button so more people can watch this video who are interested in it just like you. Now, if we can get this video to 50 likes in less than 24 hours, I will make 2 videos tomorrow just for you. Now, you'll still probably get one video, but I will make 2, okay, if we get 50 likes in less than 24 hours. So guys, how can we beat the stock market with these trades? Well, I'm going to show you how you can take your failing trades and going down and losing money every year, year after year. You're putting money in, you think of it as like gambling or something, because it's not gambling. And at the same time, this is not financial advice, okay? I am just showcasing what I do every single day to beat the market and make trades and plays to consistently profit and increase my portfolio. Now, with that said, guys, again, this is not financial advice, but I can show you a thing or two. Now, I'm going to take those failing trades to successful trades by what? Well, having a good stop loss, having good losses instead of bad losses. Now, a good loss is when someone has a purchase price plan and a stop loss implemented. That's good because they had a plan and they followed it. You might lose a little bit of money, but you're not going to lose a lot. Now, a bad loss is the exact opposite. You're purchasing the point at the high point of the company, and then you're going to be doing it at the low. Now, that is not the best thing to do, right? Now, he didn't account for risk or even had a plan for a stop loss. Now, finally, he sold for a huge loss down here at the bottom, okay? Now, we don't want that. We don't want that. So we're going to show you how to go from a novice trader or someone with very little experience, someone who trades just like this on Marathon. Now look at this. You entered at a good price. It was a good point to enter, right? It showed a good candle. But entering there and having a huge stop price. Now, I believe this stop price is at like 5.6%. Look at that. He's like, oh, I'm going to do a 5% stop loss. Well, the company never even went down that low, right? So he may lose most of his position if it goes down. Now, what expert would do this? This is what I would do, okay? Now, look at the difference. Look how big of a difference that is with the stop loss, even just the stop loss. Now, a stop loss is one thing, and we'll talk about that in just a minute. But that leads me to my next point. Now, make sure you, if you're not already signed up, sign up with Moomoo with the link below in the description. You can get 8% on your uninvested cash. So that means for every $100 you invest, you can get $8 for free just having it sit in this account. Okay, some people don't make 8% a year investing, much less even in savings accounts either. So you also get 15 free shares. Companies like Tesla, Google, imagine getting a free share of Tesla. They're like at $190 right now at the time of this recording. So check out that. Now, let's get back to this. As you can see, this is bad. It's like a 5%. This is more like a 1%, okay? This indicates a really good stop loss. It's a very small margin for error. If it dips down below, you're only going to lose about 20 cents a share compared to losing almost a full dollar. Dang, not good, okay? So now, here is where you want to actually have your target. Now, if your stop loss is a quarter below your entry, like 25 cents, and you're able to take $1,800 in shares, because this equates to only 1% of your total account. Never invest more than 1% of your total account. So if you have $100, 1% is $1. You can't do much with the dollar. So you got to increase your portfolio. You got to get them free shares from Moomoo, right? Okay, so now your target's at 2.5% stop loss size. Since the stop loss size is 1% of the account, a 2.5% increase would make 2.5% for your target goal for the account for the day. You want to aim between 1 and 3% profit. Now for me, I like to get between 2 and 3% profit. 2 to 3% profit is worth my time. Okay, if your ratio is 1-1, you're risking 100 to make 100, you're never going to get anywhere. That's like gambling. What you want to do is find these setups where you are risking maybe 25% to make 100%. So maybe you're risking $100 and you're going to make $1,000 or $250, right? That makes a little bit more sense. Now, getting back into it, you don't want to do what these people are doing right here. We've been talking about a lot on the channel of this, but you don't want to buy up here, hold for 20 years or 17 years to buy back up. You're just letting the company have free money to use constantly for decades, and then you hope and pray that it goes up. It's not going to go up, guys. And if it does, it's going to take a very long time. You're lucky this wasn't JCPenney, because JCPenney went down and never came back up. Okay, don't get caught holding the bag. That's the point of this. Stop losses are important. We're going to go over a stop loss trade, but don't get caught holding the bag, guys. Don't lose more than, I'd say, 5% stop loss. 5% stop loss max. Max, guys. Okay, now look, this is the benefits of a stop loss. Look where the entry point was, at $1 and a nickel. Okay, your stop loss is at $1 and a nickel and some change. It's like, I think, 10 cents a share. That's very small, very small. You're buying at the low end. Look at this right here. It's stopping at the low end, okay? So if it does go down again, I'm out. I'm out, because it could go down and we lose a lot of money. Now it didn't, so what we're gonna do, we're gonna buy here. It broke up, okay? Now we're gonna take 25% off the top. Boom, I sold some shares. It goes up again. Boom, I'm going to sell some more shares, another 25%. So now I'm 50% out of my position, but I have 100% of my money back. Okay, now this is the fun part, because anything from take two at 50% up, boom, trailing stop loss. Now, if it were to hit, I'd be out. See where the trailing stop loss is here? It never hit here. It got close, it never hit, and then boom, it shot up. If I would have sold everything here, then I would have been out and I would have lost all this opportunity too. So you can also lose money by missing out on opportunity, just like you can lose out on money going down and holding the bag, okay? So have your trailing stop loss. It went up, up, up. We're cool with it. We're cool with it. Let it go up. And it went all the way up as high as here. Now here's your target 3. Know your target. Okay, get out here. Don't be greedy. Or have your trailing stop loss follow this up, down. Once it's down, you walk away, you have confidence that you made a solid trade. This was a 30-minute, not 30-minute, these were 30-minute ticker symbols. So 31, 32, 33, a little bit less than that. So in just a couple hours, you could have tripled your account. Now, Sophie, they're up 16%. Okay, did the same thing. Bought low, sold high. As soon as it bottomed right here, boom, out. Made a lot of money with the stop loss. Didn't really have to think about it. Wasn't stressed out about it. ZFox was another one at $1.03. They're up 19%, guys. Now, they only moved 16 cents. But if you have 100 shares at 16 cents each, that's getting up there in money. Okay? And you can do this with a small account. Now, this trailing stop you can do on Robinhood, Moomoo, Webull, anything, right? And for all of you who don't know what a trailing stop is, I showcase it right here. The stop price follows or trails the highest price of the company. So when the market goes up, that goes up. And when it goes down, as long as it doesn't hit that stop out right there, then it doesn't sell. Now, if it goes below, then it'll sell. As you can see, it goes all the way up here and it starts to go down, and you still lock in money because you paid for it down here. But it stopped out here. So you made money and it did the work for you. It did the work for you. You don't even have to worry about buying and selling anymore. You just buy, put a trailing stop order on it. Like the second you buy it, put a trailing stop to sell. If it's a day trade, great. You get one day trade if it bottoms out. You don't lose your money. You don't have to hold it overnight, or you hold this thing for 3 weeks because it's running for 3 weeks up and you get a trailing stop and it bottoms out and you get 20, 30, 40, 50, 60% profit sometimes on these companies, 100% profit. Okay, I know you guys can do it too. And definitely check out this video next. The 3 stocks with some major money making potential. I call out some of these companies for this week, last week of January, episode 422. Also, if you guys have not yet, become a member. It's free to join. Over 70,000 members in our private community of investors, like-minded individuals just like you. So join the community over there and check them out. Let me help you take your failing trades into successful trades, your bad losses into good losses. Let's win week, guys. Thank you. I appreciate you guys. I love you guys. And let's beat the market this week, all right? Watch another video. Let's get this to 50 likes in the next 24 hours. And I'll put 2 videos out for you tomorrow. All right, guys. Thanks for watching. We'll see you in the next one. And don't forget to subscribe.